The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon. Welcome to today's webinar, Fund Balance Administration and Projection. My name is Matthew Darius with New York ASBO, and I'll be moderating today's call. Our presenter today is Chip Clark from D'Arcangelo. He is a partner out of their Utica, Rome office. If anyone has questions at any time, we've got two ways to go ahead and get those answered. The first way is you can type in the chat window your question. I'll be monitoring that throughout the call and breaking in to make sure Chip can answer that for you. The other way is you can ask Chip a question over the phone, or if you're connected to the audio via your computer, you do have to have a microphone hooked up. In order to do that, you will have to hit the raise hand button on the GoToWebinar pane that comes up on your computer. If that's minimized, just go ahead and mouse over that, and it'll go back to full size, and you'll be able to hit that button. So with that out of the way, I'm going to turn it right over to Chip.
Thank you, Matthew. I put together here a presentation regarding fund balance. I don't think at any time that I can recall fund balance being more important than now with the state economy and the 2% tax cap. Fund balance management and administration is becoming more and more important, and the need to properly project fund balance is becoming very important in your budgeting process. So I think it's a good topic for us to go over today. I encourage any questions through the chat window or just present them verbally, but I'd like to hear some of the questions that are out there, and we can either answer them during this presentation or at the end of the presentation. I've labeled this presentation Fund Balance, the good, the bad, and the ugly, because there obviously is, with fund balance, there's necessary components of it, the good, and there's some pretty ugly components of it, especially with forecasting the the current New York State economy and how to properly administer fund balance. But I put here in our first slide, many school districts that I've encountered still are encountering, you're starting to see it kind of dwindle off, but say in the last 5 years there was large percentages of unexpended appropriations on the expense lines. And what is large? I consider large unappropriate. I usually use a rule of thumb with our school districts between 1% and 5% unexpended appropriations, 5% being large and 1% being pretty tight. And my experience, going historically has been school districts do have amounts of unexpended appropriations, and that's what we call their security blanket. The revenue side has been pretty tight, and we'll go over that in some of the subsequent slides. But the security blanket has pretty much been in the expenditure lines of the budget. Health insurance, employee benefits have been typical areas where school districts have had some cushion. What's the bad of fund balance? Well, the bad is that you're kind of limited in how you deal with either trying to fund or increase your fund balance, or limited in your ways to deal with any reductions in fund balance, and that has a lot to do with your salary contracts and some of your post-retirement health benefits. 70% of a district's expenditures are in the salary and benefit lines. You're kind of limited as to what you can do from a budgetary standpoint in dealing with those costs. I know a lot of school districts are getting creative now with contracts going forward, and that's a good thing. But you're kind of limited in what how you can manipulate your expenditures, or how you can deal with the expenditure side of the budget. So you have minimal flexibility there. Also, as I'm sure you're all aware, the governor's office thinks you have excess fund balance. That really came out with the Ebelar study, and a lot of the political spin, as you will, is that school districts have excess fund balance. So you're kind of losing that political battle out there because the governor thinks school districts have excess fund balance. Now, I think he's put all school districts in the same pot here. Some have excess fund balances that I've seen. Some have very little fund balances. It really depends on how you've monitored and how you've administered your fund balance throughout the years. Mandate relief legislation really doesn't really address the real issues that are out there. And then, like I said before, and I think the real issues are in some of these benefits and the contractual expenditures that you have that you can't really do a whole lot about. So a lot of the mandate relief, although I think it's good, it does kind of pick away at some of the problems, but it's not going to be the solution. And fund balance the ugly. Last year you had to comply with a real property tax cap. There's uncertainty in the state aid that you actually receive. It's supposed to be going up this year, but who knows? I mean, from a budgetary procedure standpoint, I mean, it really is. It's tough to really pinpoint what you're going to get from the state with state aid. That's been really a problem the last 3 or 4 years. And this year it's either going to be flat, or I think you're probably going to get a little bit more in aid depending on your situation. Using reserves is like using your savings, and this is what I really want to kind of harp on a little bit today. Is we got to be very careful in how much we're dipping into our reserves. There's going to be times where you don't have a choice, but that's why the projection piece of this presentation is very important. I think you're really going to have to really properly plan and project fund balance to determine how much reserves you're actually going to need to use. And we'll get into reserves and the different reserves that are out there, because I do think some school districts even this year are going to have some ability to fund some reserves. So if you don't have reserves right now, if you're very limited in the number of reserves that you have, maybe we can give you some ideas on some potential reserves that you can use. Also, federal aid will be minimal, if any. I think most school districts have between the jobs money and the other stimulus money, the ARA monies, that's kind of helped you along the last couple of years. But that's gone away. The stimulus cliff, as they call it, that's gone away. So the real problems are really still staring at you. As to what you're going to do going forward in dealing with this climate, this New York State economic climate, because I really think school districts have to really start looking at the expenditure side of the budget and make the tough cuts, and I'm sure a lot of you have made the tough cuts, but they're going to get uglier and uglier as the years go on, unless this economic climate turns around, and I don't really see that happening. I know we're dealing with about a $3.8 billion deficit, New York State deficit. So I think even though you're going to see maybe a little bit more state aid this year, I think the future of the school district is still, the expenditure side is still going to have to be dealt with. And like I said, some school districts, even though the governor thinks school districts have excess fund balance, I come across a lot of school districts that don't really have any fund balance. They've complied with the 2% limit years ago and the 4% limit now, and really, maybe had boards that, really were against putting money in reserves and wanted to give money back to the taxpayer through the appropriated fund balance line. And so you do have some school districts, based on the decisions that they made, historically, with very little fund balance. And really, those are the districts that I'm really the most concerned about, because those are the districts that really can't sustain, the stimulus cliff and the rising benefits that they have to pay, and the salaries that they have to pay. So they're really going to be forced sooner than later to really deal with the expense side of their budgets and cutting programs, and that's what none of us like to see, but that's really where where it's going. I'm going to get into some basic slides here. Just depending on the audience, I want to make sure I make sure that everybody understands exactly what fund balance is. Fund balance in the accounting term is really assets minus liabilities, and obviously the fund balance that we're most concerned with is your general fund balance. Revenues in excess of expenditures will increase your total fund balance. That's taking into account you don't have any reserve activity or any other activity, but your surplus is going to increase your fund balance, and any deficit expenditures in excess of revenues is going to decrease your fund balance. I am seeing, as I said before, with some of the surpluses that are out there, budgetary surpluses that are out there, historically, say going back 5 years, I've historically seen revenues in excess of expenditures. This year, I am starting to see that decrease, the amount at least of revenues exceeding expenditures decrease, and some of them are going in the deficit, which is what I would expect to see, this year or even in the future years, especially, is that you're going to start having some deficits within your general fund. Last year, we dealt with what's called GASB 54, which changed the designations of fund balance. And I just wanted to briefly go through some of these. We dealt with basically 5 areas of fund balance and changed the terminology that we're all used to for the last 20 years. And really the designations changed to where there's non-spendable, restricted, committed, assigned, and unassigned. And to kind of put it in old terminology, really your restricted fund balance is your reserved fund balance. Your committed, your assigned, and your unassigned were what we knew as your undesignated, unreserved, undesignated fund balance. So even though these terms have changed per GASB 54, you're still dealing with the same buckets of fund balance, both reserves and your unreserved, and you're designated for the subsequent year's tax levy. Now your unassigned, as I said, your unassigned really takes the place of your unreserved, undesignated fund balance. And that's the amount of fund balance that most districts are concerned with, because this is the one that's limited to 4% of the subsequent year's budget. And this is, typically if I go back, we do a lot of analysis of districts statewide and come up with some average percentages. And I would say probably a good 60% of school districts were really struggling with this 4%. They really had excess of 4% in their unassigned fund balance categories. This year has changed that. Now I'm seeing districts that typically would be at 6 or 7% of the subsequent year's budget and not in compliance with real property tax law. Now they're starting to get underneath the 4%, and that's not a real concern, but it definitely is showing me the school districts are starting to dig into their fund balance a little bit more to keep tax levies stable or tax rates stable, and to sustain program. Now, as I said, your restricted fund balance, your restricted fund balance is typically with a school district is your reserves. It's money that's set aside for a specific purpose, a legal purpose. It's not available to use to reduce taxes in the subsequent year, unless you have, and I'll go over that in later slides, unless you have proper authorization to do that through board resolution or legal, being able to do that legally within some reserve language. But typically your restricted fund balance is required to be set aside per general municipal law or education law. Must be for a purpose specifically authorized by statute. And we'll go through the specific statutes that authorize you to have reserves, and we'll go through the different reserves in these subsequent slides. Why is fund balance so important? Well, it assists you, like I said, in reducing spikes in your tax rate. To have fund balance available to offset the legal, it's got to be used for what it's intended, what it's legally intended for. But you don't have to fund it back up to its original level. We'd like to see that. Most school districts are used to doing that. But to have reserves and to have fund balance has allowed districts for a number of years to kind of monitor and to level out those spikes in tax rates. Where I've seen school districts spike in their tax rates are those school districts that didn't have reserves and didn't have any unassigned fund balance. Those are the schools that I really saw have problems passing their budgets going forward. This becomes more important now with that the property tax cap. Where school districts had the ability to really, go after the taxpayers to sustain programs if they've had unexpected losses in aid or unexpected expenditure increases. The taxpayer, you've been able to go after the taxpayer for that difference. Now you're limited. You still can, but you're kind of limited more as to how much you can increase your tax levy. Fund balance improves credit rating. This is one of the areas that the bond rating companies look at. They look at your fund balance. And then any unbudgeted or unanticipated contingent expenses. This is what fund balance is good to have, that cushion. And it helps fund state aid shortfalls. Some considerations in managing fund balance. Again, unassigned fund balance should be at or below 4% of the subsequent year's budget. That's real property tax law. Amounts of fund balance appropriated for subsequent years. That's something that I'm going to go through on a couple slides. This is an area that I've kind of been having discussions with my boards and audit committees on. We've got to be very, very careful here on the amounts that we're appropriating towards the subsequent year's budget, because as these amounts get bigger, you gotta make sure you can sustain those amounts. Otherwise, you could end up, really having a problem with your budget. And if these amounts get out of hand and get out of control, then you better have room in your budget to sustain those levels. And then there's a couple slides that we'll go over later in this presentation that kind of show that. I give an example district budget to actual statement, similar to what you see, or pretty much exactly what you'll see in your financial statements. And I go over, where this sample district or this example of a district that has a large amount of appropriated fund balance, how they were able to sustain it, but also how difficult it's going to be to continue to sustain that going forward. And that's why long-term planning with your reserves and with your fund balance is important to see where your contracts are, to see when you're going to have ability to really make cuts. So, the long-term planning for a school district is a very difficult thing. I understand that because you never know where the state's going to be with their aid, but you really got to start to try to plan out, at least on the expenditure side. Some management concerns regarding fund balance. Reduce reliance on appropriated fund balance. That's what I just discussed, being able to really sustain that appropriated fund balance. The more you rely on it, the more that amount gets bigger and bigger. The more difficult it's going to be if you're using that to pass your budget. It's going to be harder and harder to do that as reserves start to dwindle, and as your unassigned fund balance starts to dwindle, and budgets start to get tighter. Having those unexpended appropriations available to maintain that appropriated fund balance is going to get difficult to do. So monitoring of your revenue and expenditure budget and I'll give an example of that status report in this presentation, will be very, very key to knowing where you are, having accurate fund balance projections, so you can make the decisions early on. I think you're going to start seeing audit committees and boards expecting forecasts earlier than before. Typically, I think school districts would start doing projections March, April area. Now I'm starting to see more pressure for management to start preparing these, in January, even in December, start giving some projection as to where you're going to end up at the end of the year. And that's why having good procedures in projecting fund balance is going to be more and more important than it ever has been in the past. Also, and one of the concerns that I'm sure management has out there is trying to keep these reserve levels constant. It's easy for boards and audit committees to say, well, let's just reduce our reserves. Let's take it from reserves. I think you have to try to push back a little bit on that to where, because these reserves, and there are cases where there's reserves that have excess levels in them, but reserves are there for a reason. They are there for legitimate liabilities, hopefully. And so these liabilities aren't going away. If anything, they're increasing. So having these reserve levels, is really something you're going to have to try to maintain. So I'd be hesitant to try to go into your reserves, although reality, probably you will be dipping into your reserves and have less ability to fund them back up to their levels. You really got to try to push back on just really massively utilizing reserves without the ability to fund them up to their original level. Now I'll start to go over the types of reserves that are out there. And as I said, management of these reserves is critical. I'm not sure, in our audience, those school districts that have maximized their reserves and have really consulted with, their auditors or anybody else out there to make sure they got all the legal reserves that they possibly can have, and that they really know how to fund them, expend from them, so they don't end up in trouble. Types of reserves out there. Usually reserves are going to be established either by general municipal law or education law. These reserves here are authorized by general municipal law, and they're the repair reserve, the workers' compensation reserve. I'll get into the specifics as to which reserves apply to which districts in later slides. This is just a list of some of the reserves that are out there. The mandatory reserve for debt service, unemployment insurance reserve, the insurance reserve, and then the all-famous employee benefit accrued liability reserve, and then the retirement contribution reserve. Reserves that are authorized by education law are the capital reserve, the tax cert reserve, reserve to offset uncollected real property taxes, which really doesn't apply to most school districts here, the property loss and liability claim reserve, and the reserve for tax reduction. Permissible purposes when establishing reserves. Specifically, I'll go through here each individual reserve, really highlighting the reserves that I typically see and that are most utilized by school districts. And first here we have the repair reserve, which is used for repairs of capital improvements or that are recurred less than annually. So these are amounts, the repair reserve. Not a lot of school districts have this anymore. It was a very popular reserve, I'd say 7 or 8 years ago. But not a lot of reserves, but not a lot of districts have this reserve because although you can establish it by board resolution, you can't fund it without voter authorization. So typically what you see instead of the repair reserve is the capital reserve that I'll go over later. Workers' compensation reserve. This is established when a district besides the self-insure for workers' comp claims. Even if you're in a consortium, if your consortium is a self-funded consortium and not a premium-based consortium, you can establish the workers' compensation reserve here. Mandatory reserve fund for debt service. This is for retiring any outstanding debt after a sale of a capital improvement. And it's also used here if you have excess funds after a capital project. You can transfer, and it was bonded for. Those excess proceeds of a bond are required to go into debt service fund to offset any debt service on that applicable bond. The unemployment insurance reserve, this is for districts, which most districts self-insure for their unemployment claims, and is not permitted in city school districts. Insurance reserve, this is for self-insuring claims that would be applicable to anything that you can't get insurance for. So it's really for those districts that insure. You don't really see a lot here with the insurance reserve because really it's only for those claims that you can't get insurance for. The retirement contribution reserve, this is a popular reserve that is utilized for ERS only. I did have some school districts that were trying to fund their TRS increases here, but this is a reserve that is specifically for ERS. And with rates going up as they have, a lot of school districts are utilizing this reserve. This is a good reserve if you don't have it to utilize to offset the increases in ERS rates. And then last but not least here, the Employee Benefit Accrued Liability Reserve. This has got a lot of attention, and this is a reserve that, I definitely have seen amounts in here that were overfunded. But basically, it can't be for the cost of retiree insurance premiums. You can't have, and that's where a lot of the overfunding that was publicized came from. A lot of school districts were funding the retiree health insurance premiums in there, and some for legitimate reasons. Years ago, when this reserve first came out, I think it was in the 90s. Even the state was a little bit confused as to what could go in this reserve, and I know there was some recommendation to put retiree health insurance premiums in this reserve. But as we all know now, based on the controller and subsequent state guidance, you cannot put costs of retiree health insurance premiums in this reserve. It's not used to finance any retirement awards. The only thing this reserve is used for is for compensated absences. And also, as of about 2 years ago, if you need to get certified, you need to have your computation of your reserve certified and that excess certified in order to be able to use it towards your tax levy. And that's been going on for the last 2 years. But any districts out there that have a certified excess, you need to get New York State Comptroller approval to utilize that towards your tax levy. Permissible purposes of reserves, capital reserve fund. This is for projects where bonds may be issued pursuant to local law, not for repairs. Your tax cert reserve. This is for the payment of judgments and claims and tax cert proceedings. Reserve for tax reduction. This is for reductions of the tax levy up to 10 years, funded from the proceeds of sale of school district property. I get a lot of questions on this reserve for tax reductions, but it's only if you've sold bonded property, real property. Other permissible purposes of reserves, the property loss and liability claims reserve. This is for payment of claims of school districts that self-insure. And also this cannot exceed 3% of your annual budget, or $15,000, whichever is lower. So that's the maximum that you can fund the reserve annually. How to establish a reserve. Some reserves can be established solely by board resolution. Those are repair reserve, the workers' compensation reserve, the reserve for debt service, the unemployment insurance reserve, the insurance reserve, the employee benefit accrued liability reserve, retirement contribution reserve, tax cert reserve, property loss and liability claims reserve, and a reserve for tax reduction. The reserves that require voter approval to establish, is the capital reserve. The capital reserve requires you to go to vote to establish it. This is a reserve you got to be careful with. It's a reserve that I've seen probably the most inconsistency and lack of compliance with and how school districts have administered this reserve. Requires a separate proposition to establish it, and that proposition must state the purpose of the fund, the ultimate amount of the fund, the probable term of the fund, the sources in which you're going to fund the reserve, and cannot be used as a rolling fund for capital projects. Now that I'd like to spend a little bit of time on as to what a rolling fund for capital projects is. Now, what I've seen school districts do is they'll establish the capital reserve, say funded to $1 million. And what they'll basically do is that'll just be a cap on that reserve. So they just don't exceed that $1 million reserve, but they may spend and fund more than that $1 million, and that is incorrect. That reserve can only be funded up to $1 million. So if you fund it $500,000, spend $250,000 out of it, okay, you don't have $750,000 that you can continue to fund that up to the $1 million. You only have $500,000 because you've already funded it by $500,000. So that's something that you got to be very careful with, because for years this was used as a rolling fund for capital projects. These amounts that were the ultimate amount of the fund were used as caps and not as overall funding authorization, which is what it is. How to fund reserves. Most reserves can be funded by your budgetary appropriation, which in essence means it can be funded with surplus fund balance. Those that can be funded through budgetary appropriation are the workers' comp reserve, retirement contribution reserve, the tax cert reserve. Just since we're on the tax cert reserve, this cannot be established to fund claims for a fiscal year after your fiscal year is ended. And what that typically means is you can only fund that tax cert reserve specific to the warrant that it relates to. You can't go back retroactively and fund for tax certs for the last 3 years. You can only fund that tax cert reserve for the amounts that are applicable to a current warrant in that current fiscal year. The reserve for tax reduction, for reduction of tax levy up to a period of 10 years, and the only way you can fund that is through the sale of school district property. The mandatory reserve for debt service, funded by the board solely from the proceeds of sale of property to the extent that you owe debt on that property. Others are the unemployment insurance payment reserve, reserve for offset uncollected real property taxes. Again, this is not a reserve that a lot of districts can utilize. The property loss and liability claims reserve, again, cannot exceed 3% of your total budget. The employee benefit accrued liability reserve, you can transfer money from other reserves, but you need to get a specific referendum for that, and it needs to be part of the language of those individual reserves. But I'd be careful here. Most school districts aren't funding their employee benefit accrued liability reserve. Most are just actually reducing it. So be very, very careful here if you're funding your employee benefit accrued liability reserve. That's within the legal limitations which controllers addressed, specific guidance as to how to calculate the amounts that can go in that reserve. But you'll need to make sure before you fund that reserve that you're not in excess already. The insurance reserve, payments into that fund may not exceed 5% of your total budget, and it also can be used with transfers from other reserves subject to that individual reserve's requirement. Reserves requiring voter approval of the fund. Like I said before, the capital reserve, not only does it have to have authorization by the voters to establish, you have to have authorization by the voters to fund it. It needs to be for a specific purpose, and you cannot fund and spend that reserve in the same year. This is another area that I see a lot of school districts not in compliance with, is they'll fund the reserve and pay and utilize money out of the reserve in the same year. It really cannot, you cannot utilize monies in the capital reserve until the subsequent year. The repair reserve, although it's not required that you have voter approval to establish it, it is required that you have voter approval to fund it. How to expend money from a reserve. Certain reserves don't require voter approval to spend. Those are the tax cert reserve, reserve for tax reduction, workers' compensation reserve, the unemployment insurance reserve, the insurance reserve, employee benefit accrued liability reserve, retirement contribution reserve. None of those require voter approval to spend, although they need to be spent on the items that are legally established at the fund that is specific to each individual reserve. Repair reserve, repair reserve and cap reserve can get complicated, but with repair reserve, you need a public hearing to expend the money from the reserve. And you also give 5 days notice if you're going to spend money from repair reserve. And that's one of the other reasons why a lot of districts don't have repair reserves, is that you have to have a public hearing before you spend the money. In an emergency, the board may expend without voter approval, but it requires a 2/3 board vote to expend, and it has to be deemed an emergency by the board. If you do spend based on an emergency, that amount must be repaid to the reserve over the next 2 subsequent fiscal years. The property loss and liability claims reserve. The board has authority to satisfy the property loss and liability for subsequent losses when they're self-insured or when they're discontinuing self-insurance. So a lot of school districts that I see utilize this reserve are schools that may have been self-insured for health insurance, are now going to a premium-based plan. You are allowed to have a liability reserve to offset any claims that may occur after your self-insurance runs out. So any dates of service that may have been pending out there when you were self-insured, you can have a liability claims reserve to offset those claims that come through between when you're self-insured and when you've gone to a premium insurance. And then mandatory reserve for debt service. Although it does not require voter approval, it needs to be used to offset the debt service that it was funded for. So if you've put money into your debt service fund, either from a sale of a building that it was bonded, or if you've had excess monies that were left over from a bonded capital project, those expenditures must relate to the debt service that they were put in there for. And lastly, the capital reserve, as I said, you cannot expend from the capital reserve until at least 1 fiscal year after you've funded that reserve. So you can't fund and spend in the same year. Some fund balance reserves do's and don'ts, criticism and recommendations. This is something that I've gotten from the New York State Comptroller in some of their reviews of fund balance and school district reserve funds. Some common criticisms regarding fund balance and how districts have been managing their fund balance. Overestimating appropriations, failure to effectively monitor the budget, and appropriately encumbering funds at the end of the year to provide additional appropriations in the next fiscal year. This comes down to how much we consider to be a reasonable amount of additional appropriations. As I said, our firm kind of uses a 1% to 5% rule of thumb as to whether we consider the additional appropriations left over in a budget to be excessive. The state average really in some of the research that we've done is right around 3.8% of additional appropriations left over for school districts. But this is an area that I think the state is looking more on as to how closely districts are preparing their budgets to actual and how much room districts have in their budgets. That's kind of a double-edged sword, in that you want to have that room, especially if you've appropriated a lot towards the subsequent year's budget. You got to have that room in order to sustain those appropriations going forward. But as we start to get tighter in our budgets, that's going to be harder and harder to do. Now, having overestimated appropriation caused the districts to underestimate the amount of surplus funds available, and then increasing the amount of surplus in the next year. So, that kind of goes what I was just saying, in that when you have excess appropriations, just to appropriate it towards the next fiscal year's budget is something we got to be very cautious. Recommendations regarding over appropriating your expenditures. Review your budgeting procedures and make sure, again, this really comes down to having good projected fund balance procedures. And then also understanding, your encumbrance procedures to make sure all valid commitments are accounted for as encumbrances, making sure that you don't have encumbrances that shouldn't be encumbrances. But I've seen a lot of school districts with their encumbrances, really not maximizing the amounts that they could encumber during the year. And I know the controller has really spent some time, in some of the reviews with encumbrances. Another criticism, underestimating revenues. This is some late adoptions of state budgets, and this is in the controller's words. I don't want you to think that these are coming from me. These are criticisms from the New York State Comptroller relative to school districts' budgeting and fund balance management. Late adoption of the state budget and reduction of state aid to school districts is not a justifiable reason for underestimating your revenue. Recommendation: district officials should review current budgeting procedures and provide the most accurate representation of projected revenues based upon all information available at the time the budget is developed. Commissioner says to utilize the best estimate of state aid that is reasonably available to the district at the time it calculates the tax levy and issues the warrants. I know this is easier said than done. And really what I've seen here, this criticism by the controller, in the districts that I do, I haven't really seen this becoming a problem. I'll show you some examples of a school district that is a typical example where what I've seen are from a revenue side, budgets are very tight. And they're pretty close on the revenue side. It's where I see potential criticism is in the overexpending of the budget, or over budgeting of the expenditure side. Another criticism: improperly retaining surplus funds in excess of the real property tax law. It's impermissible to allow fund balance to exceed the legal limit to provide additional resources for unforeseen events. So you can't justify having over your 4% limit because you're trying to weather the storm, so to speak, or whether you're trying to set some money aside for next year's budget. I've heard districts utilize that to me, saying, well, we want to keep 6 to 10% because we want to have excess money available. That's disregard of real property tax law. It's not going to be a viable excuse to the state for why you have over 4%. Consequences for repeated noncompliance, willful violation, as grounds for removal of district officers under Education Law 306. Have I seen that happen? No. Typically what we see here for a district that the commissioner addresses for being over the 4% is you'll get a letter from the commissioner stating that you're over the 4% and to develop procedures to do something with the excess amount, such as give it back to the taxpayers as appropriated fund balance, or establish some legal reserves and fund legal reserves. Some ways to minimize that, the 4%. You'll see some of the projection or the projected fund balance examples that I have deal with knowing exactly how much you have in excess of fund balance, or projecting how much you're going to have in excess of your fund balance. It really comes down to having good fund balance projections during the year, knowing what reserves you have available, what reserves you have potential to fund, and that's why understanding the reserves that we went over. I know I went over them pretty quick, but there's good guidance out there specific to the reserves, and New York State Controller's got good guidance on the legal requirements of the reserves. So if you're a district out there that hasn't maximized all the legal reserves, hasn't funded all the legal reserves, there's really no need to be over the 4%. And so you really should start looking at reserves and understanding the flexibility or the opportunity that you have to fund reserves. Unassigned fund balance in excess of the 4% limit must be applied in accordance with law towards funding reserves or lowering the tax levy. Other criticism regarding reserves: failure to properly and timely establish the reserves. This is something I deal with a lot, as to when reserves can be established, when they can be funded. Basically, what I've seen based on commissioners, including this appeal of Simons here, is what I normally reference when I'm given this question. You should establish your reserves prior to June 30. So you should know reserves that you're going to need to establish prior to June 30. However, you can fund those reserves up to the date that you set your tax levy, which is sometime, usually depends on where you are, but sometime in September. So you don't have to fund your reserve prior to June 30. I've seen some recommendations that you both establish and fund that reserve prior to June 30, and if you can, great. But the reality is that a lot of districts don't know exactly where they're going to be with their fund balance until, say, July or August, once they close their books. So you do have some flexibility in funding those reserves up to the date that you set your tax levy. However, if you don't have that reserve, to retroactively go back to June 30 and establish a reserve, in August, is frowned upon by the commissioner. So that's not something that I would recommend that you do. Other criticism regarding reserves: failure to account for and credit interest earned in each reserve. This is something that the controller has spent some time on, you know, when they've been you know, auditing school districts, the Revelar especially, is that school districts aren't crediting the interest earned within each reserves. Most of the reserves, if not all of them, do have specific language regarding crediting the specific reserve with any interest that's earned. Failure to maintain balances in reserves accords with statutory limits. You know, IBLR is the big one here. You know, there are some limitations as to how much you can put into reserves. Some of the ones out there that really don't have a lot of language regarding the limits are the retirement contribution reserve. There's really no language in there as to what the limit is on that reserve. Or the unemployment insurance reserve. There's really no limitations as to how much can go on there. Not that you have carte blanche with those reserves. It has to be reasonable. But there's really no specific language that really sets a limit on those reserves. You know, best practice here when it comes to maintaining balances is really you should have, you know, the board's understanding and the board's approval when funding reserves. You know, and looking at some of the audits that I did historically, say 3 or 4 years ago, boards were somewhat clueless as to what was in their reserves. Management had pretty much full control of funding reserves, and balances kind of got out of whack. I'm starting to see that change a little bit. You know, especially with what happened with the FRM900 reserve, you're starting to see more board involvement as to what's going in reserves. So even though not required, I do consider a best practice to be that school districts have board resolution to fund reserves and have full transparency as to what's in the reserves and the amounts that are in there. Failure to maintain only necessary balances in the reserves, you know, typical here is the FLR and funding of post-employment benefits. Having those amounts in there is not allowed, and so school districts had not just compensated absence, but had other balances in there. I've seen school districts that also were putting in there some of the retirement incentives and those types of things into the reserve, which, as I said before, is not allowed. Some recommendations regarding reserves. Make sure that you understand these reserves, like I said before. Make sure you understand the specific laws, general municipal law or education law, as to how these reserves can be established, how they should be established. Make sure they're done through either, depending on the reserve, either done through board resolution or board approval if you're doing a capital reserve. Understand how these reserves can be funded and where they can be funded from, and also understand the specific expenditure requirements from the reserve. Now, this becomes more and more important now when you're dealing with your budgets and you've got a big hole in your budget on the revenue side and you're looking for money. You just can't take from a reserve and appropriate towards the tax levy or to fill the gap in your budget. It needs to be, you can only take from a reserve for the amounts that you anticipate expending for legal purposes that reserve was set up for. So you can't just, for an example, with the FLR reserve, you know, say you got $2 million in your FLR reserve and you're looking for $1 million to balance your budget. You can't just take $1 million from your FLR reserve to fund your budget. It has to be, you know, let's just say, you know, the only compensated expenditures you have are, say, $200,000. Well, you just utilized $800,000 from your reserve in direct non-compliance of the legal requirements of that reserve. So you can't just pull money out of the reserve. It's something that I think you're going to start seeing pressure as the budgets get tighter to do. So I want to raise warning here that you're careful in this regard, that you can only expend from these reserves once they're established and funded for those purposes that the amounts that were put into that reserve are legally for. Boards, as I said, as a best practice, should full transparency as to what's in the reserves. I believe boards should review reserves currently established and determine if the balances are necessary and in compliance with statutory requirements. So having that complete transparency with your board as to the reserves that you have and what's in there and how they're calculated, it's going to protect you as management as to any potential problems down the road. It was the EBLR. I know tax cert before the EBLR was a reserve that the state kind of harped on, and a lot of school districts were not in compliance with their tax cert reserve and how it was funded, and how it's legally worded. Districts really didn't have a clue as to how to manage that reserve and administer that reserve. So I think to have your board's involvement with your reserves only protects you. So I would fully recommend that you get at least the audit committee involved in knowing what reserves you have, what's in there, how they're calculated going forward. District officials should reduce the reserves to the necessary levels or discontinue the reserves to the extent permitted by law. If you have a reserve out there that's just sitting there, I've seen this with, again, that tax cert reserve and other reserves, to where the reasons why those reserves were established and the liabilities to where those reserves relate are no longer there, but the reserve just continues and is going on indefinitely. So this comes down to having that complete review of the reserves that you have and the funding and the calculations that support those reserves, and if they no longer apply, then you discontinue those reserves. And again, before you discontinue the reserve, understand there are sometimes some specific legal requirements in discontinuing the reserve, and some reserves only allow for funding from specific reserves. That's just how the wording of those reserves were established, but it is the law. So it's not that you can discontinue a reserve and just put it in any reserve that you so wish. You really need to review the laws. Questar's got a pretty good fund balance and reserve chart that really shows you the specific reserves and the amounts and the legal requirements within those reserves, both for funding and expending. I kind of utilize that. So there are materials out there. Controller's got something out there that also goes through reserves and the specifics of each reserve. But you really need to know how these reserves function before you transfer any money out of there or seek to discontinue a reserve. Oops. Sorry about that. What are the warning signs of fiscal stress? As the years go on, again, we see a lot of budgets, and we see a lot of trends with school districts, and I'm starting to have more and more conversations with school districts as the things that I see relative to how their budget and their actual are coming out from year to year. And we're starting to see some trends that are changing relative to some of the pressures that are on school districts with the economy and appropriated fund balance that I've been talking about before. But some of the warning signs of fiscal stress are significant or recurring operating deficits. Like I said, we hadn't really seen that historically. We've seen a lot of surpluses. I'm starting to see school districts, those surpluses are starting to level off or go down. Also starting to see some operating deficits. So that's a warning sign if you have an operating deficit, and especially if that deficit starts to recur, that you're going through some fiscal stress. And I'm, it's kind of funny that we're talking, when I say fiscal stress, I think every school district is going to be going through fiscal stress, some sooner than later. But these are just some of the areas you gotta that are going to give you a heads up that you're headed for some concern. negative or low declining fund balance. You know, as school districts are trying to balance their budgets, we're starting to see more fund balance used. Strained cash flow and increased borrowings if, you know, needs of RANs or TANs to provide cash flow means you don't have, you know, reserves or cash necessary to meet the liabilities. So if you're in need of continued RANs and you don't have ability to kind of pay off those RANs, you know, does it happen? Yeah, but is there a need to be concerned? Yes, if those RANs are increasing or if you have the inability to spend them down. Spending down reserves too quickly, this is really what I'm seeing. I'm starting to see the inability of districts to really begin to, or after they've spent down a reserve or utilized the reserve for the legal purpose, to be able to fund the reserve back up to its limit. So, you know, as we utilize reserves, we got to be concerned if we can't fund them back up, that at some point fund balance isn't going to be our saving grace anymore, and then you're going to have to really start taking a look at where you are with your budget, especially the expenditure side of your budget, and what you need to do to deal with that. And those, you know, you don't have many options, and they're not good options. They're usually dealing with program reductions in program. Other warning signs of fiscal stress: unencumbered balance less than 2% of budget. You know, this goes back to what I was saying before about when I'm looking at on the expenditure side specifically. You know, when I'm looking at that unencumbered balance, and I'll show you exactly what number I'm looking at in the next couple slides. But when you're looking at the unencumbered balance, okay, the amounts of you know, of excess budget to actual on the expenditure side, again, our rule of thumb has been between 1 to 5%. 1% being kind of too tight, very, very tight on the budget side, not a lot of room for error, not a lot of room for anything unanticipated. And 5%, which is on the looser side of the budget scale, you know, once you start having those balances of less than 2%, you're pretty tight on. You don't have that cushion anymore. You don't have that security blanket. And if you've appropriated a lot towards the budget in the previous years, you're not going to have a lot of ability to sustain that. And that's really the crucial path, or that path that I'm really starting to see that concerns me with school districts as these budgets get tighter. You know, I want school districts to be fully aware of these amounts that are being appropriated towards the tax levy. And where that's going to come from is either from your unassigned fund balance or room in your surplus of your budget through having amounts that you've over appropriated. Current ratio of less than 2 to 1. What the current ratio is the ratio between assets versus liabilities in your general fund. You know, basically, for the districts that I see with current ratios that are less than 2 to 1, are those reserves that don't have a lot of those school districts that don't have a lot of reserves. Because when you have reserves, you have cash, which increases your assets, which really gets you over that 2 to 1 ratio. So the districts that I've typically seen for a school district, the current ratio, the only way it really applies to a school district is if you're including cash. You know, normally what you'll see is around about 2.2 to 3% average of current ratio for school districts that are relatively healthy. Strategies for managing fiscal stress. You know, these are, none of them are good, but strategies are freeze spending. I saw a lot of school districts do that. I think it was a year or two ago, with great success. They really did affect, through proper projections. They understood that they need to do a spending freeze now. They really turned the district around and ended up with a decent surplus at the end of the year. I saw probably 5 or 6 of my school districts do that either last year or the year before, and to good success. Review investments to maximize interest earnings. I got to include that, but really your interest earnings are going to be minimal in this economy. The tough one, review current staffing needs and class sizes. These, I've been looking at some of the trends here regarding this, and really it's not good. About 60% of schools last year did reductions in both their non-instruction and their instructional staffing. And class size, about 53% of school districts statewide increased class sizes or had increased class sizes probably as a result. So this economy and the trends going forward are affecting program. A lot of, I think it was 35% of school districts statewide last year reduced or eliminated extracurricular activities, including athletics. So these are the hard choices that districts are making to try to deal with this. So it's it's more than just dealing with one issue. You got to be dealing with fund balance. You got to be dealing with the revenue side as much as you can. You got to be dealing with the expenditure side. The key is not get surprised at the end of the year, and have good projective procedures to where you know where you stand, say in January, February, where you can react timely. And the districts that I talked about that froze spending had very good procedures relative to projecting fund balance. They knew the situation they were in early on, and they were able to react. So that's why this is so critical, because it's going to get harder and harder to deal with the management of these issues if you're not on top of your budget and understand exactly where you're going to be early on. This is an example of the budget to actual that I'll spend a little bit of time on. This is going to be pretty typical of your financial statements that you can pull out, and you can see where this district, and I pulled this district because it was really a typical district that I've seen. And this is the revenue side that I said I'm seeing pretty tight. This district right here was the revenue budget variance was 1.9%, and I'll put my cursor. Hopefully you can see it right here. That's the number I look at when I'm looking at this variance. And that's the amount. How close did your actual revenues come in to budget? And you'll see this district here was slightly over $464,000 over budget and what they anticipated. But if you look down in the final budget category under other financing sources, you'll see these are the amounts that they appropriated out of either the reserves or appropriated fund balance, and that represents 7.9% of their budget. And I'm using this as an example because this is where this was a healthy district, still is a healthy district, but it's a district that's going down a pretty dangerous path because especially this district increased their appropriated fund balance for the 12-13 year even more. So you look at this amount of appropriated fund balance, both reserves and your unassigned fund balance, you've got a goose egg there of $1.6 million that you're going to need to make up somewhere. And where is that going to be? Well, obviously, if with this district, if revenues come in typical to what they did this year, it's not going to come out of your, only $400,000 here is going to be coming out of the revenue side. In order to sustain that level without spiking tax rates and cutting programs to balance a budget, you're going to be looking at the expenditure side of the budget, which is what I've kind of spent more time on, because I think it's the only place where school districts are really going to be able to deal with these problems. Now, if you look here, this district, and you look down at the bottom here, the 1.3 million budget variance, okay, that's approximately 5% budget variance. As I said before, you know, with that rule of thumb, the 1% to 5%, so they had some room here on the expenditure side, and luckily they did, because if they didn't have this, they would have had a lot of difficulty in sustaining their appropriated fund balance. But just, you know, for this district, they not only sustained it, but they actually increased it, which I raised when I did the board meeting a lot of caution about, you know, because they increased it substantially. And, you know, next year, depending on, you know, and these budgets are going to get tighter and tighter. It's going to be harder and harder to find room in your expenditure side of your budget to sustain levels of appropriated fund balance. And if you don't have these cushions in your expenditure side of your budget, and politically it's getting tougher and tougher to have these also, because boards are looking where's the fluff in the budget, where's the room, and they're getting smarter and smarter as to, not that we were hiding things from them, but I think really just districts that were properly you know, budgeting and putting room, as long as it wasn't excessive, say 10% of your budget. I think anybody within a 1 to 5% variance was doing proper budgeting. But if you weren't more on the side of, say, 5%, and you had a significant amount of appropriated fund balance, you found yourself in some hard times and having to make some drastic cuts. Some fund balance trends here. You know, this is a chart that I utilize when I present to boards, and it shows based on the GASB 54 definitions. It shows fund balance, and what I'd like to point out is if you look at between 2008 and 2009, okay, you see unassigned fund balance increasing. You see reserves increasing, your restricted fund balance increasing. You see the amounts designated, if you see amounts increasing, well, that's all that stimulus money, okay? So that's why you see those amounts. And as that stimulus money started to level off, you see that decreasing. But if you look in the red area, that's the amounts designated for subsequent years' budget, you see that's continuing to increase. And this is a trend that's not just specific to this school district. It's a trend that I'm seeing with a lot of school districts, and that's increasing. So your amounts that are being designated for subsequent years are increasing in order to keep tax rates stable so you can pass your budget. But the other amounts are starting to go down. And if you look between 2011 and 2012, you'll see with this specific district, unassigned fund balance went down. And I forget about the reserve for encumbrance was relatively stable, but the amounts designated for subsequent years went up, and restricted fund balance went down. So this district dipped into their unassigned fund balance, dipped into their reserves to designate for the subsequent year's budget. And so depending on if, you know, how the 12-13 budget performs, this district could really be significantly going into their unassigned fund balance and their restricted fund balance, and those amounts are starting to dwindle. And it's only a matter of time to where you're going to have an amount that's designated for the subsequent year that you're going to have to try to sustain, and you're not going to have it in fund balance to sustain it. You're not going to have it in your security blanket as part of your budget. The only place you're going to have to balance that out is by reducing it through reducing your budget and reducing salaries and benefits, reducing program, those hard choices that districts are being forced to make. strategies for reducing excess fund balance. For those districts that have excess fund balance, my first recommendation is to maximize reserves, establish and fund reserves. Don't just, before maximizing reserves, just don't increase the amounts designated for taxes. I would start with trying to fund reserves, but I know the political situation, it's getting harder and harder to increase reserves with the situation that we're in. Review capital needs for establishing a capital reserve. If you can get that through your voters, a capital reserve is a great reserve to have going forward. Increasing fund balance for designated for taxes in subsequent year. Again, be careful here. It is an option to deal with excess fund balance, but to me, it's the last option. It's the option that you really want to be careful with, because that creates a big hole in your budget going forward that you're always going to have to sustain, or without reducing program. Now I'll get into some examples of fund balance projections. As I said, having good procedures for projecting fund balance is being more and more critical. Where school districts used to project fund balance beginning in March and April, as pretty much as just a part of the budgetary process. I think they're being pressured more for projections in January area. And it's hard to do. It's not easy to do. I'm not saying it's easy to do, but having timely fund balance projections so you can make timely decisions relative to where your budget's performing, and through a spending freeze or dealing with whatever you can to deal with your budget. Timely projections are going to be very, very important going forward. Start projections in February, as I said. They help reduce fluctuations in tax rate if planned properly. These are all things that you can do if you have timely projections to make the appropriate decisions as early as possible. Some examples of fund balance projections, and there's a bunch of ways of doing this, and school districts do it. I probably haven't seen 2 school districts do this the same. So I've just put together really 3 methods that I like, that you could utilize as templates to try to project. With all these, it really comes down to how do I project my revenues and expenses, and if depending on how your budget performed in previous years, you should have a pretty good idea of your revenues, especially because I've seen revenues be pretty tight, budget to actual, for most school districts. So you really, those are the key ingredients here, other than just how it's all formatted, is really being able to annualize your revenues and your expenses through the end of the year, as to what you're going to spend or what you need to reduce expenses by, in order to end up where you want to end up, or when your board wants you to end up with fund balance. But this first method here starts off with total fund equity. So that's total fund balance. That's everything, okay? And you can get that from your financial statements from last year. But it's the amount of reserves, it's the amount of encumbrances as of the end of the last fiscal year. And then, as I said, the key ingredient here is to estimate and annualize what your revenues are going to be for the year. And here, you get 24.2 million in annualized revenue. You're going to have budgeted amounts, that you can use as a guide. You can try to extrapolate what the revenues you've received to date. You can utilize state aid reports. Most school districts, you're going to have a couple pieces that are going to be the most. You're going to have your real property taxes. You know what that is. Your state aid, you're going to pretty much know what you're going to get in state aid. It's the other revenue sources that you're going to have to kind of take a look at and see where you're going to be. So revenue side I don't really see as the problem. Expenses can be a little bit harder but you kind of know where you're going to be on your salaries. Overtime might be a little bit of a variable, but not to a huge extent. You know what your benefits are going to be. You know what your TRS is. You know what your ERS is. So annualizing the expenditure side, being realistic of where you're going to be with your expenditure side, it's going to give you the two most important parts of this calculation. Your encumbrances. I'll say here I would just take a look at encumbrances for the last 3 or 4 years to see where they are. If they varied greatly, then then it could be more of a problem. But I would put in this category here in encumbrances what you had in your reserve for encumbrances from last year. But if you know that your encumbrances are going to be higher, then put your best estimate in there for what your encumbrances are going to be. And then the amounts that you designated towards the subsequent year's budget from last year. This is just coming up with what, leaving certain things the same, where your fund balance is going to be. Okay. Restricted is going to be what were your restricted fund balances as of the end of the year last year. And if you're trying to get to your 4%, calculate what your 4% of what your 12-13 budget is, and you'll get what your excess fund balance is going to be. Okay. Now this is just an example of one way of doing it. And again, so your total unassigned fund balance in this example here is approximately $1.3 million, which is your excess fund balance plus your unassigned fund balance. But this at least gives you, okay, I'm going to have a little bit of excess that I can start talking to my board about either funding reserves, establishing another reserve, if last case scenario, if you need it towards the tax levy for the subsequent year, you start having that conversation that you might have additional monies left over based on this projection. So this is a projection that takes into account your total fund equity and then basically backs out your reserves and some of the other categories of fund balance. This next projection here utilizes the your unassigned. So you're starting off with what was your unassigned fund balance from the previous year. Okay. Again, coming up with the most important part, which is what are my revenues going to be? What are my expenditures anticipated to be? Okay. And these next three categories are just basically stating that encumbrances will be about the same. Okay. Reserves, we're going to leave them the same. We're not going to anticipate any funding of reserves or any reductions in reserve. We're just going to leave them the same for this projection. We're not going to, in this projection, anticipate increasing the amounts designated for the tax levy. We're going to leave it the same. Again, what's 4% of my subsequent year's budget? How much can I legally have? And what's my excess? This is probably what I see most districts using, if a similar method to this one. I use the previous method, but this is another method that's used. And lastly here, method number 3. This, if you look at your, most of you will have this in your MD&A. It's a required part of your MD&A to reconcile your unassigned fund balance. I put this in here because this is just another way. It's similar to method number 2. Very similar actually, but just done a little bit differently. So, but it's done more on the budget side. Okay, as to how you performed budget to actual. So this somewhat relates to that previous example, that budget to actual schedule that I had on the previous slide, where a district was $464,000 over on their budget. So they're anticipating being roughly $500,000 over in their budget. Their budget performed. They were under budget on the expenditure side of $1.3 million. So both of those, because you're over budget on your revenues and you're under budget on your expenditures, are going to be increasing your unassigned fund balance. And then how much do I anticipate appropriating towards the 213 budget? You put that amount in there. Again, if you want to keep that the same as it was last year, find out where you stood, and that's what this example is. You would just put in the amounts from the previous year that you appropriated, and then you get your estimated total unassigned fund balance. And then, which is the same figure, you're less, it doesn't break out the 4% limit. So those are three methods that you can utilize as templates for fund balance projection. They may or may not be similar to what you currently use. These are just examples of what I've seen in the field for districts doing fund balance projections. So you can utilize these, but again, really the key area is to spend the most time trying to accurately reflect what your revenues and what your expenditures are going to look like through the end of your fiscal year. And that's the hardest part. And that being said, I'm not sure if Matthew has received any questions. I'd be happy to answer any fund balance questions. If there are none, then I really appreciate you attending this webinar. And hopefully, we helped you out in dealing with fund balance and at least the importance of it. Because I really, as I said when I started, the ability to properly manage fund balance has been a key asset to those school districts that have been able to kind of weather the storm, so to speak, up to this date. But for those districts that weren't managing fund balance, those are the ones that are really having significant issues now, sooner than later. But then the ability to project fund balance going forward is more important than I've ever seen for school districts to understand where they're going to be early and to make the appropriate decisions timely towards fund balance and dealing with the expenditure side of the budget as timely as they possibly can.
All right, thank you very much, Chip. I have no chat questions and I have no raised hands currently, but if anyone does have a question for Chip, hit the raise hand button on your GoToWebinar control panel. If you are connected over the phone for the audio, you are all set if you have a question, but if you're connected via the computer for audio, you will have to have a microphone connected in handy in order to ask questions. So before we send Chip on his way, if anyone has any final questions for Chip, please hit the raise hand button and we'll give you a few seconds to do that. Okay, I have no questions from our attendees. Chip, thank you very much for presenting today. We appreciate it. Your presentation was phenomenal. And everyone, thank you also for attending. If anyone would like a recording of the webinar, you will be getting an email from GoToWebinar with a link to that. Chip, thank you very much and have a great day.
Thank you.